Hi everyone, welcome to Malethabo Accounting Academy. So on today's tutorial, we're going to look into bank reconciliation. So with regards to bank reconciliation, we've got two parties that we're going to look at. We're going to look at the bank as well as the business. So normally not normally, but rather on my previous videos, I would often refer to the customer and the business, or refer to the suppliers and the business, or SARS and the business. So on this specific tutorial, we're going to be looking into the bank and the business. So what is a bank? So a bank, it is a business like any other. It is primarily a service enterprise that offers banking facilities to other businesses and individuals, right? So what is we're going to be just said this tutorial will be based on bank reconciliation. So what is bank reconciliation? So bank reconciliation, it is when we as a business, we receive a bank statement from the bank, and we need to now compare the bank statement against the cash journals, meaning what is reflecting on the bank statement should be reflecting on our cash journals. What do I mean? Okay, when I say cash journals, I'm specifically referring to the cash payment journal and the cash receipt journal, right? So now, why is it important? Why is it important that the cash journals should be identical to the bank statement? It is because once we've completed recording our cash journals, we need to total and close our cash journals, and then we need to go and open up a general ledger known as the bank, right? Now, when we open up a general ledger account known as the bank, we are going to take the total receipts and the total payments and record the total receipts on the debit side of the bank account, and then record the total payments on the credit side of the bank account. And then we need to calculate the balance brought down. The balance brought down that we get, that figure, it needs to be identical to that of the bank statement, to the balance that we find on the bank statement. So because, as I was saying, that transactions that are reflecting on the bank statement should be reflecting on our cash journals, but that is not always the case. We come across discrepancies. So now, if we have discrepancies between the bank statement and the cash journals, that means our bank account, or our general ledger account known as the bank, will not have a correct balancing figure, or will not have a balancing figure that will be identical to the balancing figure reflecting on the bank statement. I hope that makes sense. Okay, fine. So basically, bank reconciliation has to do with that comparison, and then we need to identify those discrepancies, and then we need to investigate as to what are the reasons for the discrepancies. And then once we've done that, we need to now record or execute the necessary adjustments, the necessary amendments or additions, so that we get to a point where what is reflecting on the journals is reflecting on the bank statements, so that we can have the balance brought down on a bank account that is identical to the balance that we find on the bank statement. I hope I make sense. So the goal is basically to get to a point where, when we record on our bank account, on our general ledger known as the bank account, our balance brought down figure should be identical to the balance that we find, the balance figure that we find on the bank statement. Okay, so now with regards to comparison, I want us to look into I want to describe the bank statement first of all. So the bank statement will reflect a column that has the dates in which the transactions took place. It will have another column that has the details of the transaction, and it would have a debit column, it will have a credit column, and it will have a balance column. That is how your bank statement will basically look like, right? So now on this comparison, when you start comparing all the transactions that are receipts, meaning all the transactions that are receipts, the figures of those transactions, okay, let me rather say all the transactions that we record on the bank, on the cash receipt journal. Yeah, let me say that. All the transactions that we record on the cash receipt journals. On the bank statement, the figures of those transactions will be reflected on the credit column. And then all the transactions that we record on the cash payment journals, the figures of those transactions will be reflected on the debit column. I hope that makes sense. But often that is actually a bit, somebody else might look at that and find it very confusing. That why is it that the receipts are recorded on the credit column on the bank statement, and the payments are recorded on the debit column of the bank statement? Okay, so that will not make sense if you are looking at the bank statement from the business's position. It will not make sense. You need to look at the bank statement from the bank's position. Remember, the bank statement is not our it is an external document coming into the business. The bank statement, it is a document generated by the bank. So meaning now when the bank records on the bank statement, it records from they record from their perspective, from their position. So now when we put in money into the bank, so when we receive money, so when our bank balance increases, it simply means that, remember, the money that we put in the bank, we're just asking the bank to keep it safe for us. But it is not the bank's money, it is our money. Meaning it is not the bank's asset, it is our asset. So our money in the bank, to the bank, it is a liability. Let me repeat that. The money that we put in the bank, to us, it is an asset. But the money that we put in the bank, to the bank, it is a liability, because that money does not belong to the bank, it belongs to us. So whenever we want that money, we need to be in a position to get it. Meaning now according to according to the bank, or in the bank's position, the money that we have there, that we have literally put there on our bank account, it is not, they don't regard that as an asset, but they regard that as a liability. As a result, that is why all the cash receipts transactions will be reflected on the credit column of the bank statement, because according to the bank, that money is a liability to them. Therefore, and liabilities increase with an entry on the credit side. And then all the transactions that are payments will reflect on the debit side of the bank statement, because whenever we make payments using the money that is in the bank, that means the money that the business owes us decreases. As a result, that's why all payment transactions are recorded on the debit side, because liabilities decrease with an entry on the debit side. So yeah, I also wanted to clarify that when you do our comparison, when you start comparing now during your bank reconciliation, you need to look at, when you look at the transactions recorded on the cash receipt journal, you need to look at that against the credit column on the bank statement, right? You need to look at all the entries that are made on the credit column on the bank statement. You're looking at that against, you're comparing that against all the transactions that are recorded on the cash receipt journal. And then all the transactions that are recorded on the cash payment journal, you are going to compare those transactions against the transactions that are recorded on the debit column of the bank statement. I hope I am making sense. Okay, so I see that this video is going to be rather long. I'm going to do another video where we're going to be looking into what the reasons for the discrepancies that we find between the bank statement and the cash journals. So on my next video, I'm going to do another one. On my next video, we're going to get into what are the reasons, or what are the things that result into the bank statement, the transactions that are on the bank statement and the transactions that are reflecting on our journals, what results into us identifying discrepancies between the two. Okay, thank you very much for watching this video. You are more than welcome to comment down below if you want some clarity on what I have been talking about on this tutorial specifically. And yeah, thank you very much once more.